It's only entertainment.
Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today we're going to take a look at a chart from Viridian Capital Advisors, the chart of the week, changing with capital raises. Looks like cannabis capital raises are on the rise. So it's mainly focusing on the US and Canada, but we're going to show capital raises by country, both debt and equity. So we're looking at the green bars, which are depicting the capital raises. The brown bars are depicting debt raises. The red bars are depicting capital raises by companies headquartered outside of the US or Canada. So with that in mind, so it looks like total capital raise for 2020 was $4.3 billion. So that crash of cannabis equity prices and the accompanying capital crunch that began in the second half of 2019 as investors became delusioned by companies failing to meet overly optimistic projections. U.S. competitors were slower than expected in achieving the break-even points like EBITDA, while most Canadian LPs continue to burn through large amounts of cash. The number one prediction for 2020 was that price and profit were going to kind of come together. So that's why a lot of companies rather this year are trying to clean up their balance sheet, trying to clear that up and be even more competitive. It's just pretty cutthroat right now. COVID-19 provided an extra dose of uncertainty. You had legal cannabis industries never being able to go through a recession, not knowing if it's going to be part of that sin stock, where that group has an inverse relationship during economic downturns. But we'll see if that investors are going to continue to guard their wallets or whether or not they're going to open those up and start investing. After the election, we're seeing a lot more of investment. We'll see if that continues to move on. But all in all, we might have cannabis equity prices beginning to climb in the summer, and then capital raises activity continue to lag, maybe. That's what happened last year. I don't think that's going to happen this year. We're seeing a lot of people looking at the tops and all-time highs in Canada and now kind of coming back into the U.S. if they can, if they're accredited investors, looking at getting into the market there in the U.S. as it looks to legalize. That's the speculation with the House and the Senate and the administration all kind of being Democratic and more pro than the previous administration. That's the gamble. That is. So the 2020 election produced a turnaround spark, and we have predictive analytics on an automated algorithm that showed us a month in advance that was going to happen. But that is with the cannabis stocks, not the election. We have newly legalized states creating capital needs, and that's New Jersey. Missouri went with medical, but in addition to New Jersey, you had Arizona, and then Montana, and then North Dakota. So a lot more states. Hopefully there's some events that we can go to and kind of meet those folks. MJ BizCon is going to be in October in Las Vegas. I will see you there. So newly legalized states creating capital needs. You have the Senate flips, Georgia especially. Kind of see if that holds after the midterms. I wouldn't hold your breath. That's for a different podcast. Cannabis capital markets, they've responded vigorously. There's $2.8 billion raised in the first 9 weeks of 2021. That's 36% higher than the previous record for the period achieved in 2018. So Viridian is expecting that to continue a broadening of issuance to large numbers of mid-size issuers, meaning that there's going to be a lot of cash to those in the mid-sector, mid-cap that can see a lot of growth and give a lot of their shareholders some returns. U.S.-based companies, they've raised an increasing share of cannabis capital of 26, 46, 63, and 67% in 2018, and a lot more recently. Debt peaked at 37% capital in 2020, up from 28% in 2019. That's subsequently fallen to about 3% of 2021 issuance at historically high valuation multiples that have eliminated corporate dilution fears. So we mentioned that earlier, companies are paying off debt a lot more as valuations go up. So we're seeing massive market valuations and multiples. Tesla, it's not cannabis, but a great example of their price to earnings being like 1,400, whereas GE, I think, is like 14. Now, obviously not apples to apples, but I'm just saying even Amazon is at like 90x. So if you're paying for 90x for them to return. That's 90 times earnings. So you have to anticipate them to bring something in return, and they generally have. But there is a lot of speculation in cannabis and some of these other tech companies. There are corrections as well. So a lot of these cannabis companies are taking that opportunity with these all-time highs to pay off a lot of debt. And so we'll have to see what that means with some potential buyouts. There may be some more mergers. There was the biggest cannabis company of all time with merger up in Canada. We'll have to see what else happens.
With that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.
Don't forget to smash that like button on your way out and check out these other videos that we've got.